guys, welcome back to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. So today I'm gonna make a video. I'm gonna make a video about indicators. You hear it right, indicators. So of course, I'm using TradingView. It's very user friendly. So if you guys wanted to join me on TradingView, please you can do it by clicking the link below. So let's talk about indicators. So there is about, I should say, thousands, 10,000s, 20,000s. I do not know because day in day out there is a lot of indicators happening or created. So there are a lot of uh, type of indicators. Some of the indicators are it will drawn on your particular on your chart. Okay, we call it the primary chart. Example like the moving average, moving average. Just assume. So moving average, it will happens on your chart. So the other type of indicators are the secondary indicators that will open another window for you. So example here, I have it like the MACD. So if you can see properly, it will happens at the secondary window. So what am I going to tell you today? So for me, I've been using indicators, I should say, my whole trading life until a few months ago. It's true, really, few months ago, I really stopped using indicators at all. I do not have a single indicators on my chart right now because I really want it clean. I don't want it to be too complicated because indicators, there is three reasons why I'm not using indicators. Okay, just hear me out. Three reasons. Reason number one, lagging. Why do I mean by lagging? All right, why do I mean by lagging? So if you think about it properly, indicators, what does indicators need? Indicators need data. Okay, because indicators is derived from maybe a type of formula, a mathematic formula, or some kind of plotting that I do not know. I don't want to go into so in details about it. So where does the data come from? The data come from the price. So if you think about it, the price move first, then only it produce the data. Right? Then what happened? It only produce the indicators, and the indicators will show to you. So example here is the classic example is the moving average. I'm just putting the normal moving average. So a lot of people, I'm not criticizing, this is just my simple opinion. So a lot of people will be using the simple MA cross. I'm not sure, maybe a single, some are using a single MA, double MA, or triple MA. It does not matter. So let's assume here is the very simple cross. Let me get another MA out, moving average. So this time, this one, I'm gonna change it to, let's assume 20. All right. So a lot of people will be trading this kind of indicators, the MA. So what is the problem? The problem is that if you look at it, it is accurate sometimes, correct? It is accurate sometimes, but you do not know what is the reason of you going in a trade. Okay, some of it, we call it as a noodle. Okay, we call it noodle type, means that this time. So if the MA cross and then recross and recross, so this is the big problem. A lot of traders will lose at this moment. They do not know. Then not only that, the price, the cross only happens, sometimes the cross only happens after the price movement. So example, just a simple example over here. So if you can see the price drop, then only there is a cross. So let's switch it to a higher time frame so that it's more obvious. All right. Okay. Sometimes the price already moved. Okay, already moved. Example over here, the price already moved a lot. Then only started to cross. So means that you're getting yourself in a not advantageous position. disadvantageous you're getting yourself in a disadvantageous position. So this is one of the reason why I do not want to use indicators anymore. All right, because it's lagging. So the price always comes first, then only the data, then only the indicator. This is the first reason. So second reason is because it's complicated and how should I say, it's a conflict. Yes, complicated and conflict. So with indicators, sometimes I have this kind of conflict. Means that the price already crossed, but I have doubt about the cross. Does it happen? Example over here, this is a good example. So let me cut replay bar. Okay. So indicators over here. So if you can see the price drop a bit and then making a sideways movement, then the MA cross at this point. All right, it crossed at this point. So now you will have doubt, is this the correct way of entry? Because if you look at it, the price is moving sideways and you have no knowledge about what the price is going to happen. All right, but if you sometimes you just say that, okay, you'll tell yourself that I won't be going in this particular trade. Let's see what happened. Then what happened? The price dropped. Then you'll be blaming yourself, right? So what happens is that the next time the price cross again, all right? Example over here, the price cross again. Then you think about it. Yes, this time is a buy because it crossed. It must be a buy. So now, this is a very, very good example. If you look at it, once this already crossed, what happens is that the price drop because the cross is at this candle. So you're making a buy, you're doing a buy trade. Then the price drop, definitely will hit your stop loss. Then what happens is that the price only goes back up slowly. Definitely will hit your stop loss. Even if you look at it, the price came down quite fiercely. So this is what I mean by conflict and complicated. All right, sometimes you don't understand all the price movement. The price does not move nicely or smoothly like a lot of people thought it will. Not every time we have this kind of fall, right? Sometimes we have a very or should I say slow climb going up, but it's still an uptrend. It's just you just need to know. You just need to know what is the real thing that's going to happen in the market. It's not that simple. All right. Okay. The third reason why I don't use indicator is because it's messy. I tell you, it's very, very messy. So luckily we are talking about same indicator. This is moving average 9 and moving average 20. So let's assume a lot of people out there, they are using different type of indicator. Example, some of them they might be using MACD. All right. Then some of them they might be using let's say Bollinger Band, because Bollinger Band, do I have Bollinger Band? Definitely I have. Let me see. Yes. If you look at it, I add all these indicator. Okay. What happens is that first, what is the setting for these indicators? All right, because different kind of time frame, you need different kind of setting. All right, you need to know the input, all these things. This is the first problem. Then what happens is that if you look at your chart will be very, very messy. There is a lot, what we call it, a lot of worms climbing around. Okay, crawling around. There is a lot of worms crawling around. So this makes the chart looks very, very messy and dirty. All right. And the other thing is that sometimes you will have this problem is that when you have 2 or 3 indicators, maybe one indicators you feel that is not enough, you may add in another 1 or 2 indicators. Let's assume you have 2 indicators. Okay. Let me get the Bollinger Band out of here first. So maybe you have 2 indicators. What happens is that if one indicator is telling you to make a buy trade, and then the other indicator telling you to make a sell trade, so what should you do? What should you do? You get confused, okay, because it's so messy, you don't know what you should do, okay, you're very, very confused. So this is the reason, one of the main reason. It's very, very messy. I don't want my chart to look like this anymore. Previously, I have how many indicators? I tell you, in a single chart I have 4 to 5 indicators. One indicators for me to enter, one indicators for me to reconfirm, a lot of things. And then I remember there's one indicator for me to exit. So every time I go in, come out, I felt that I'm not in a good position. I don't enter a trade at a very good position. All right. So this is why I don't use indicators. I don't use indicators. Except for one. So I'll be honest with you, except for one. I'm not introducing these indicators, but this is the only indicators I might, or should I say I trust it, because I felt that there is a magical magical there is a magical feeling about these indicators. So what is the indicator is? Okay, you need to study about it, but I usually I very now I seldom use it, but last time I use it a lot. Anyway, I'll do sometimes. I just make a double check on it. So the indicator's name is called Fibonacci retracement. All right. So I really trust Fibonacci retracement a lot. Why? I don't know how to tell you why. Because I felt that it's really very accurate. It gives me at least a sense of the price, where does the price likely to move, but I don't want it to influence my analysis. So what I did is that I will make it very clean. I'll just do my drawings, my line, my boxes, everything. Then only I will drag my Fibonacci to double check whether does it have any particular levels at that area. All right. So that is how I use my indicators. The only indicators that I trust. Okay. So that's all for today. Today is not about supply and demand trading. It's about clean trading. All right. Clean, naked trading. Make your chart looks clean, and happy trading over the weekdays. All right. So see you guys then. Bye.